Okay, so welcome everyone to the first revamped version of the webinars, where again, similarly, we are going to work through webinar questions of people that post them that aren't able to join, and through the webinar questions that you guys drop in the Discord and the Zoom today. We're going to start off, as we usually do, with just looking at a trade of the week or a certain setup, just going over some of the concepts that we teach and how we use it. And as we work through the questions, of course, after, we might start doing a lot more of looking into the potential weekly outlook of future currencies, right? So you know how we spoke about over time, we are going to begin to, again, structure the course in a way that makes a lot of sense to all of you, as well as basically get over enough information that we can start to actually do weekly outlooks together and start potential trading rooms and live rooms that we do down the line, especially once I'm done with my own studies. So I'll have the time to be able to focus on YouTube, you guys, and my own trading. Hence the only 50K verification and challenge that I did. As you all know, I've been doing the 50K, not the 100K, just because in the case that anything didn't happen or didn't work out, which, you know, I doubt it would be that way, I would at least be able to go and focus on that down the line. So let's start off with this EU sell that we had and why we took it. Currently with the EU, a lot of you were asking me about this holding or not holding. The reality is, like I said, as per the structural moves that you saw us show during the structure videos, yes, this one should hold for potential bullishness given this exact time frame. That said, we can also have price come deeper into retracements as far as these demand zones down here, or even these large demand zones here. So maybe somewhere at the 50%, which, as you guys can also see, also lines up with the imbalance that's created right here. Now, the reason we can still expect bullishness, even though price may break this low, is because of the mentfx block tactic, or whatever you want to call it, right? Because the structure isn't found just one way. Like we said, structure is found a multitude of ways. That is through the overall structural plays on a given time frame, the actual candlestick structural plays that can, you know, switch back and forth even on one time frame, or even the mentfx blocks that can be created in and within price, right? So this right here is also a mentfx block right now. Remember, we take the high to the low, follow that up until it gets validated right here. This could have already mitigated and created a new one. So you could have been looking at that as a new mentfx block, or it's still mitigating this overall one. And within it, since the mentfx block is a large demand zone, there are other demand zones within it, right? So let's give that to mentfx block. There are other demand zones within it, such as these lows here, right? Or even 50% of it and under, that can act as potential areas where price may want to reverse from as another demand zone, right? So this is perfectly valid for next week for potentially looking for more buys, either buys that will take us into completely new highs, buys that might take us into new supply zones or supply zones in here on lower time frames, or even mini short-term buys that come to fill some imbalance or something of that sort and begin to give us lower prices as we begin to take out the equal lows or the trend line that's going to be created by these tests. Because remember, we are constantly creating liquidity and constantly moving back and forth between price. Now, how come, despite the fact that we have printed this type of bullish price action, if we get below this, why are we not fully bearish yet? Well, for one purpose, as we said, we have this mentfx block here, and 50% of it, right, that demand zone, also exists as a major demand zone. Inside of that, we also have other demand zones, which can be seen as bullish, an area for potential bullishness. Now, not only do we have that, we also have mentfx blocks. So again, consider what this high right here was before this low was created. This is a push all the way from here, and from here, there was tons of sells that were put into the market, right, all the way down. And yes, we created structure within here. We created inner mentfx blocks. Is the screen black for everyone? Just so I can understand real quick. Is it black for anyone?
No, it's good. It's good.
Okay, cool. Just making sure. So for the guy that it's black on, maybe try leaving, joining back. That's going to be okay. Otherwise, you'll have it available because we are recording it, and you'll have access to this after, of course. So just make sure you check on that. Now, how come we can use this is still a potential area where we can expect bullishness from? Well, because one, we operate in all time frames, but secondly, because from here, this was the first time they began to actually put sell orders into market, whoever that was, right, the composite man, to potentially shift themselves bearish and then to finally shift bullish. Now, when did this overall large mentfx block right here from this high to this low, remember, that on its own is a very large mentfx block. A mentfx And mentfx block is very subjective and can be drawn from anywhere. It can be drawn from this high to this low, from this high to this low, from this high to this low, and so on and so forth, right? Any of these highs to these lows. The major move, the very, very major move that we might even see better on a daily, but we're going to use a 4-hour for now because you need to see the market fractally, can be drawn from this high to this low. And what you'll notice is the validation of this, so let's just draw it like this so we can see it more. The validation of it will only happen once price trades above there. So again, all of this price action inside is invalid for this specific mentfx block. It's valid for other ones, but not this one. The only time that became valid was at this price crossover. So as you guys can see now, this mitigation is nothing more than the mitigation of this major mentfx block. And if this mentfx block wants to hold, then we should see bullishness hold above here, which means even if price comes to take out the liquidity below all these lows, what does that mean to us? That overall on this specific time frame using this specific mentfx block, price can hold above this low. And if it can hold above that low, where are the demand zones at which it can potentially hold? Well, you have major demand zones here and 50% of them, right, with the imbalance fills, as well as the demand zones down here at very, very, I guess you could call cheap prices, right? Because if they get all the way down here, that's very, a very deep retracement. I don't even think we might get here, right? We'll probably, if we want to go bullish, get somewhere inside here, right? That's perfectly valid too. But unless you have a POI there, you shouldn't be trading it, or you should be waiting for potential, confirmation, new mentfx blocks being shifted to the top side, maybe confirmations of them, Wyckoff inside those confirmations, and entries to the top side, right? That is a perfectly valid system, or at least that's how I look to get involved myself. So just for market outlook, that's how we would start to use the mentfx blocks. So anybody that saw the structure videos, this is an idea about how you can use them. And yes, I use them because there wouldn't be any point of teaching them if I didn't use them. I use them a lot for just directional buys for myself because it helps me see things, right? If I just take a look at this, I also recognize that this right here on its own is also a mentfx block on the other side. However, the overall one is bullish, this one is bearish. If I saw prices get into these areas, I could still look for sells into deeper areas here, right? This is a game of going back and forth. There's always footprints, there's always buy to sells and sells to buy. There's always going to be a back and forth in this market. So that's why, again, whenever any of us have any bias, we can constantly have it switch and have different biases, but still be consistently profitable or catch proper movements in the market using our ideas of trade management, risk management, and criteria for entering. Is the stream lagging for anyone else? Like the actual video is a bit slow, but the voice is perfectly fine. Yeah, the video might be a little bit slow. That happens. It's just because it's Zoom. We have a lot of people in here. The servers aren't that great. Hopefully a new company comes along soon. But either way, everything will be recorded. So you'll have it anyway. And it'll be instant for the recording because the recording does not lag at all. Okay, so once that's up on YouTube for you guys privately, you'll be able to access that. So as we continue talking and as we work through this specific sell and why I took it, I asked that you guys start dropping some questions if you'd like, and then we'll basically work from there as we get around to it. But right now, let's talk about what exactly incentivizes the sell here and why I look to take it. So as a lot of you recall, we were looking at this overall space here as bearish continuation over time. We were looking at this as an overall Wyckoff schematic, this being the UTAD right here, right? So again, if we follow this, and there will be section 3 available this week or next week where we do jump deep into Wyckoff because I want to make that more structured for you guys. But again, if you follow this, you have a buying climax, an automatic rally, secondary test, some kind of sign of weakness in phase B. You have an upthrust or an upthrust. Again, either one is just a liquidity creation or liquidity being taken out, which is kind of happening here. And you have the UTAD. We have the breakdown, and we were expecting the tests from the supply zones up here or potentially even the supply zones in here. Now, when price came here, you guys remember this was the trade that actually passed me my challenge. So again, even though this trade didn't run the way we wanted it to, that trade on its own passed me the challenge. So again, it's all about the way you go about it. And again, inside there, you remember there was a 15-minute Wyckoff distribution. And within that 15-minute Wyckoff distribution, I used the 1 minute or 5 minute supply zones that formed along the way and got involved on those off of even lower time frames for the best confirmation and for the best potential RR. So that played out. And then we had this break above. At that point, we shifted bullish, and from there a lot of you might have seen this last demand zone right here with the imbalance available just above it, as you can see. demand imbalance right here, demand zone right here, aka there are orders here that need to be mitigated. We had the price come and mitigate those, and then come to make new structural highs above all this liquidity. And again, your targets were met if they were above here, and new targets were met if you were looking at some higher areas here. Again, if you were looking to the left and saw something here that you could have sold at, that's fantastic. I wasn't looking at that. Instead, I was looking at, and what you'll notice is this demand zone right here. So again, it's the last down candle. You could also use this one, right? So theoretically, there's multiple ways to look at demand zones and supply zones. And this we're going to cover this again in the sections. But demand and supply zones don't have to just be the last down candle. So in this case, it was right here. But in this case right here, so if we go like this, in this case right here, theoretically, our real last down candle is this one right here, right? From there to here, and then again, what do? We include the low wick. So it's this entire area, right? And then we had price trade above it. So that's a valid demand zone now for you to expect potential buys from. However, it becomes tested here, as you can see, right? So this is now testing this demand zone because it's traded above, and now it's testing it, right? This is an entire demand zone, so it's testing some of it, and then it continues higher from there. So it tested a little bit and continued higher. Now, as it did that, what did it do? Well, in this demand zone, the unmitigated portion of the demand zone is ultimately from this wick here to still this low. So this is still an unmitigated demand zone in this area. And additionally, if we look further, there's also this imbalance. So that's unmitigated. And we can follow that down to the actual last candle. So in this case, it's not just the last down candle, it's the last move, right? The last like not even down move because it's not a down candle, just the last move before the big up move. And that area, this one specifically, is still an unmitigated demand zone. So I was actually looking for this area right here to be a buyer. So I had this set out as a opportune area to potentially look for buys at, and I wanted to refine it a little bit because this 4-hour area is relatively large. So let's go and take a look at what we have on the lower time frame, and now it presents itself relatively simply. Okay, supply and demand is actually the correct terminology. Yeah, ultimately what we do and the way we trade is more supply and demand than it is a different way. Because what supply and demand really is about institutions entering the actual market and leaving behind orders that need to be mitigated. And usually fresh, what we call fresh supply and demand zones, areas that have had no mitigation, are the more probabilistic and higher likelihood areas that we are going to see buys or sells from because mitigation has to happen there. And as a result, those are the areas that we focus on targeting or looking for potential entries from. So supply and demand is the correct terminology. And again, you'll be led into that overall world as you work through section 2. What does mitigation mean? Mitigation just means that there are orders resting in. So for instance, this is a demand zone right here. This last down move before the up move, right? And it has imbalance here, as you can see, because that means that there was no price action that came into this area. So what happened here, if you watch the supply and demand videos, is institutions or banks sold extremely heavily at this open into this position, taking on negative positions to take out the liquidity that rested below all of these lows here. Selling into that allowed them to amount more buy orders to take to the top side. And as they took it to the top side, they were able to make profits. However, as they did this, all these sell orders in here were not able to be closed. And as they're not closed, that means they're actually running at a negative even when they're here. That's okay for the composite man because the composite man has basically unlimited money. So this huge negative of probably negatives of billions of trillions of dollars, and at this point does not matter to him because he knows what he's going to do with the price, which is bring it back down to those areas to mitigate, gazillions literally, to mitigate the positions in here. And mitigate means close them at break even, right? And that's pretty much it. That's mitigation. So we expect that this fresh zone, as you can see, we refined that 4-hour area to this area here with the imbalance resting just above, meaning there's inefficient price action, which needs to be filled at that point, as well as the demand zone down here, which needs to be mitigated. So I was expecting price to come into these zones right here. Now, as price began to come here, you remember that we were looking at the breaks down in price here, and we left behind, again, supply zones. Now, again, if price made a move back up to these areas, I would look for the same thing we look for, right? New supply zones within supply zone 2.0s, or Wyckoff, to be a seller into potential areas down here. Now, I wouldn't just sell to this from here. I would sell with liquidity partials along the way because, like we said, price can drop, take out potential liquidity, and then continue without ever coming here. But we make assumptions based on potential footprints, and that's how we would do it in this specific case. So we begin to have these drops down, as you guys can see, have a little movement away, and another drop down, leaving behind a new supply zone. Right, so all of these areas count as supply zones. Ultimately, every candle can at some point be a demand or supply zone. If you look at anything in your chart, just going backwards, you'll see that this happens all the time. We leave a demand zone here, we tap some of the open of it, leaving a demand zone here, tap some of the open of it, leaving a demand zone here, tap the open of it, leave a demand zone here, tap it, leave the demand zone, tap it, leave a demand zone, finally mitigate it and jump through, creating a new supply zone. Don't really tap it here. Continue lower, leaving a new supply zone and a larger supply zone by the mentfx block. Same thing, mentfx block is a large supply zone. Tapping into that, leaving a supply zone here as we trade lower, tapping into that supply zone, trading lower, leaving behind this little supply zone that doesn't get tapped, but in the future, as you can see, gets mitigated, has movement away from it, and then continuations, right? So again, we don't just trade supply demand zones, we partner them with all the things that we teach concerning structure and Wyckoff, but it's important to understand what a supply zone and demand zone can look like for potential future mitigation, right? So can you do top down but with structure and balance? Can you do top down but with structure and balance mentfx block? Yeah, you can. That's exactly what we do. That's kind of what we just spoke about a second ago at the beginning of this, when we looked at EU and potential future projections, right? So we left behind the supply zone, as you can see right here. And at this point, I'm not sure, was I on the 15-minute? We can keep playing this out a little bit. Okay, so we created that. So as you can see, we created that supply zone and we came and tested that supply zone. After testing it, we left behind this supply zone here. And that supply zone was actually mitigated with this move here. Right, but that means that only the 15-minute supply zone, which is seen as this last up move before the down move, has been mitigated. That does not mean that something lower has not been mitigated yet. And as you'll see, we can find the last up candle just there, as you can see, and that acts as again, it's not an up candle, but it's the last move, the up move before the actual down move. And as you can see, it has never been mitigated in this case. So the 15-minute, although you could use it if you'd like to, has already had mitigation, so it's not as probable. You could also take the 50% of the overall move, if you'd like, and use that as its own POI, because the 50% has not been mitigated yet, so you can expect potential mitigation to occur at this supply zone. Now, instead, I wanted to refine it to this supply zone. And again, we're going to have a new subsection of the supply and demand section where we deal with refinements. And again, down the line, if you're watching this recording, it's already available to you, so make sure you go and watch that. So that's the last up move. And as you can see, again, very similarly to everything else, we have imbalance in this area, and you can also tell that this last move was the one that broke down structure, right? So another thing that makes a supply or demand zone more powerful is if it was responsible for a break of structure. So for instance, if we look here, this supply zone wasn't responsible. Actually, it was responsible for this break of structure, so it was good, and as you can see, it held, okay? This supply zone right here was responsible for this break of structure, and thereby it held and was good. This supply zone here was also responsible for this break and even maybe some intermediary term breaks here. So as a result, as you can see, it held relatively well. And you could have used any of these areas prior if you had used that 1 hour supply zone and refined it to these ones here, right? Refined them all the way down to this one and then had an entry here. I didn't get into this entry because I still wasn't expecting bearishness. However, after this had formed and broken down, I was now expecting to potentially be able to be in a sell if price was to make its way back into these areas. And again, as this happens, you are perfectly fine and valid to do something of this sort. This is what we call a risk entry. And if you did this, this is perfectly valid. Same thing, same targets, right? That's a 1 to 43. I, by waiting, was able to get a 1 to 38, right? So literally the RR is the same just by waiting for the confirmation. So this is up to you. This is just this is risk entry, right? There's no confirmation. Or again, you can wait for the confirmation to happen in these areas and get involved on the way down. So you count a wick as a break of structure. I do sometimes because again, a wick on one time frame is actually a body on another, right? So like a 5-minute wick can be a 4-minute body close with a new 4-minute candle that starts to trade back into an area, right? That was really close. What'd I do? Okay, so I don't know what I did here. So we have this last up move, this last supply zone where we can expect price to potentially trade up into and then see mitigation from. So we can watch what happens. Okay, so at this point I was still waiting. We're having breakdowns. As we have these breakdowns, you are perfectly valid and viable to look for more sells at these new supply zones. If you've already seen this mitigation and you don't like it, you can look for the refined supply zone in here. And as you can see, if you are on a lower time frame, there was most likely an opportunity that could have got you a fine scalp in this area here as well, right? So again, as we do this, you need to understand that along the way, there's going to be multiple supply and demand zones that form, and understanding that you have to anticipate that it might hold, but it also might not, is part of the game, right, of smart money trading. So let's continue watching this. So as you can see, there was actually a lot of mitigation from there, and we had a really good down move. And again, on a 5 minute, it looks very bare, very small, but that on a lower time frame is great opportunity. And again, we can take a look at it just real quickly, maybe something like this. So again, we are having Wyckoff form here. And technically, if we had a breaks down here, we could have started to look for sells all the way down, because this is the main Wyckoff structure right here inside of this area. Or you could have waited for the first structure break, which was here, another structure break, which was here, and you could have started to look for entries off of these highs here to get below these structural lows here. And again, it might not happen 100%, but the edge is in your favor because you understand what you're looking for, right? So this is all about, and again, on lower time frames, I probably would have already gotten an entry in most likely this last supply zone right here. So I would have already probably been in the sell that I was able to partial or break even at. So this is coming back up to potentially break even. Okay, when you set your stop loss at BE, usually, oftentimes, I'm really aggressive with it. So if I have, let's say, a setup of some sort, we have the breaks up. Either if I get involved here or if I get involved here, I will set break even after we get here. So even though I set break even, price can come back into this last demand zone and then go higher and take me out. Oftentimes, if I'm right, it doesn't always, right? Because as you guys know, I'm very aggressive. I'm get in, get out. I like to get my very final confirmation that I can get. And then I get in and I get out at structural points. That's the way I like to trade. Or I get out at structural points and then I hold or get re-entries along the way. Which time frame should we draw? Supply and demand on then. And enter in 5 minutes. You can draw supply and demand areas on any time frame. If you want to be entering on the 5 minute, you can literally be drawing them on a 1 hour or a 4 hour or a 30 minute, entering the 5 minute. It's all about, literally, it's up to you. Because the thing is, and you'll understand this over time, especially being at mentfx, time frames really stop mattering. You recognize that everything is part of already a desired movement, right? If you already have a move in mind, that monthly move is still going to be reflected in the 5 minute, 1 minute, 30-second price action, because everything's a footprint, right? So that's how we look to get involved. Again, we'll keep playing this out here. You trail your stop with S&D zones that form on the way. Sometimes I sometimes aggressively trail, other times I just partial aggressively. Would do backtesting on your chosen pairs, including your spread. Well, all right, wait, let's go up here and go through some of the questions so we don't miss anything. Before we continue with all this. It's going nice, no lag, you have the cursor. Okay, perfect. I have a silly question. Do the daily highs and lows leave liquidity above and below them? Yes, 100%. But that's true about any high or low, right? When we make this 5 minute high and this 5 minute low, on this candle specifically, those are 2 points of liquidity, okay? Any wick in this market is liquidity. This area right here is liquidity, this is liquidity. This is liquidity, this is liquidity, right? Liquidity exists above every single swing high and swing low. When you see mini moves like this right here, like this wick right here that took out this wick's low, that's a liquidity grab, a very small one. But on a lower time frame, if we take a look at that right there, right, let's just circle it so we can see it. Let's look at it on a 15-second. You can see how that looks and how different it is, right? We create, as you can see, equal lows in the market, making people think that they can finally buy, liquidate the last possible people at those areas and continue higher. And on this time frame, it doesn't look now on this time frame, it looks like a real liquidity grab, right? And then continuation's higher. But on the 5 minute time frame, it just looks like a normal wick that just traded below. But that wick that traded below grabbed the liquidity of everything that existed in this price action in this candle here. So again, liquidity operates at every high and low. So yes, on the daily, yes, at each daily literal wick high and wick low, there is liquidity. Right? That's why even for the candles like this, you can see the candles aren't just moving higher, higher, higher. They're moving higher, but also grabbing liquidity along the way for people that are too afraid to stay inside, right? Because this game's very emotional and some people are risking a lot more on even small trades like this than you might think, okay? Is the mentfx blocks at last a mini bullish swing? Try on. Can you phrase that a little bit better for me? I don't really understand that. Can you explain the difference between a mentfx block and supply and demand zones? Mentfx blocks are bigger moves and supply and demand zones not so big. Yes, ultimately you're correct, but the reality is a mentfx block is nothing more than a large demand or supply zone. So as you saw, as we described here, this right here is a supply zone, okay? Similarly, this right here is a supply zone, okay? The last up move before that big down move happened. Similarly, this last up move right here, right before the down move, is a supply zone. These are all supply zones, but at the same time, this right here from a low, so just take a low to a high, is its own supply zone, right? This becomes valid, and then it comes to test it and mitigate the orders that are resting in this area. And again, it might not look like it here, but as we get higher, you'll see that that mentfx block becomes a, as you can see, larger time frame supply zone. It's an easier way to view all this stuff. That's why, again, I say it doesn't matter what time frame you're on, because it's on all time frames. Let's get to a 3 hour, 2 hour, 1 hour. So I guess it's on the 1 hour. It's as close as it can get. So again, this is why the mentfx block is so powerful. We put in our own supply zones that don't really exist in a time frame, right? But this is still a supply zone right here, right? That is denoted by this larger push up before the push down. So that's, they're the exact same thing. It's just larger, and we have a different word for it. That's it. But you can call it a big demand zone if you really want to, or a big supply zone in this case, since we're selling from it, right? I think supply and demand are these things. They're similar. Yeah. Some people teach them this way. Some people teach it a different way, but it's very similar. However, the reason we use supply and demand is because when you have supply and demand zones, those are actual areas that orders are resting in and should always see some mitigation. So make sure you watch the supply and demand section, or at least the start of it, because we kind of cover a little bit about this. And they're much more powerful. Yes. Yes. Yes, from higher time frame. Supply and demand is actually the correct terminology. Correct. What does mitigation mean? You guys understand that? Let's check out our weekly meme, as we always do. Here we go. Okay, guys. Gazillions. For referring structure on any particular time frame, do you only take swing type 3 from structure video only? From referring to structure on any particular time frame, do you only take swing type 3? Again, I use all the structural ways of trading. If I have this overall supply zone using a mentfx block, and I have these breakdowns in overall potential structure, right, plus the confirmation of inside candlestick structure, I will use the supply zones formed at all these areas for potential mitigations and continuations, right, based on what my actual based on what my bias is. So in this case, the bias is bearish, right? We have this low, this high, just follow it along, this low, and we're expecting that this high, or I guess this high, should hold, right? How do we know? Well, now we can see inside candlestick structure, right? Move down, move up, move down. That's your mentfx block, the supply zone. And then within that, you have other supply zones that are unmitigated. So those are all putting those structural things together. I don't use any one. It's not like one is better than the other. You use them all to form a bias. It's very crucial. When you take partials, entry, partials. That's me. I don't care how much RR this is. I will take partials like this all the time. It's just because I like to manage my positions like that. That's all. And then even if this position can run 1 to 500, I will take it here. That's all. But that's just how I like to take partials. You don't have to do them that way. Do you normally look for supply and demand zones on the higher time frames? On Euro, there was that last high, which was nearly some. Do you normally look for these on higher time frames? No, not at all. So again, notice what I circled here. This is a 5-minute supply zone. Does not matter what time frame you're on, right? This is just a refined one, I guess, right? Because it was a refined one from the 1 hour. So again, like, you could have looked at this one right here, this supply zone right here, and look to sell it, or you can go and refine it to a lower time frame. But I use all of them, because even when we're refining entries, or we're waiting for, let's say, a demand zone to be touched and price comes into it, gives you potential wyckoff, or even structural breaks higher, or even mentfx block breaks higher, it's going to leave behind new demand zones, and those demand zones can either be used for confirmation again on even lower time frames, or can be used as entry criteria for higher prices, right? Can you do a top down, but with structure, imbalance, and mentfx block? Oh, so I think we went over. I think we did this, yeah. We didn't set the start, but we're kind of going over exactly how I got into this, so just pay attention to this one. That bear candle wick, does that count as mitigation? February 25th, 15 spot. February 25th, does this one count as mitigation? No, because, well, it counts as mitigation of this mentfx block, right? So this overall demand zone is actually being mitigated. However, it has not mitigated the demand zone that I'm interested in. Hence, actually, why I was still interested in sells. So the reason I was still interested in sells, again, was to actually clear this liquidity, because I was expecting price to come into these demand zones down here, because it did not come there yet. So I was actually expecting that. That's why I wanted to see sells from that point. Okay. So when you refine supply and demand zones, you refine it down to the one which has not been mitigated by going through timeframes to find the unmitigated one. Yeah, correct, right? So like, even if we look here, this is, like I said, this was a supply zone that we could have used. You could also go lower and find other ones inside here that are also unmitigated for potential better refinement, right? Or you can just take the 50% and expect refinement right there. That's the refinement. So exactly. I'll go through timeframes to find the ones that are unmitigated. So in this case, this 1 hour technically has already been mitigated at the open. The 50% hasn't, so you could use that if you'd like to, or you could jump down like I did, as you can see, and find the actual last supply zone or other supply zones within it that can potentially have mitigation. So you count a wick as a vertical structure. For example, you have a 4 hour demand zone and it wicks through but closes inside, it becomes valid. Yes. Because over time, we're also going to talk about how I'll only also use a demand supply zone if it's part of a structural break. So as you know, even though this is valid, I will wait for the breaks in structure to validate it as an actual area that I want to look for entries, right? So there's multiple steps to it. That was really close. I love the bar by bar breakdown. Perfect. When do you set your stop loss at B usually? Okay, so we went over that. Target liquidity, yes. Which time frame should we draw? Oh, so we went over this one too. So yeah, I kind of went up and down between these. So it's a good thing we're working through them real quick. So when you refine supply and demand zones, you refine down to the one? Yes. Didn't we just go over this? What's going on? Hold on. Do you trail your stop with S&D zones that form on the way? Oh, we did these a second ago. Would do back test. Okay, my main issue is when price is not in or near a POI. I can trade effectively inside a 4 hour, 1 hour POI. I can spot Wyckoff well and secure the trade. But when price is not in a POI, I struggle with lower time frame. Okay, so wait for the POIs. I mean, I only trade with POIs anyway. If I don't have a POI, then I will not enter Wyckoff, because Wyckoff, like I said, occurs everywhere. Remember the snowflake rule? And again, we will cover this in section 3, but I can circle this for you. This is Wyckoff. On a lower time frame, it's better Wyckoff. Okay, this here is Wyckoff. On a lower time frame, you'll see it, right? We can just jump down and we can see it. Ready? Okay, actually, it's ugly, so not really. But if you really wanted to go for it, buying climax, automatic rally, secondary test, up thrust, UTAD, breakdown, signs of weakness below all these structural breaks, move back up to test the general mentfx block, create a new mentfx block, right? Confirmation mentfx block, come to test it, never getting above it, right? Shifting bearish on this specific time frame, coming into the last areas of supply right here and falling completely down. And there's Wyckoff right there, right? So Wyckoff exists everywhere, but if you didn't have a POI at this level, or that POI wasn't validated, then you're not going to be entering this, because you have to understand that the market is going to be delivered to you with Wyckoff forming absolutely everywhere. And unless you're expecting something at a certain location, it will confuse you and it will fuck you. That's how it goes. Ment, can we see your prediction for what's going to happen GU? I might take a look after, or if we have time, for sure, for you. I have no problem with that. Thank you, Marys. Thank you, super clean answer. Happy, oh, clear. Happy that made sense. Nice. He wants the confirmations, yeah. Farhan's out here doing his insane little refinements. Just want to see someone else's perspective. So are the S&D zones valid if they don't grab liquidity from previous structure? Yes and no. Like I said, any supply and demand zone that has not been mitigated is valid. Now, the probability of that area being better is going to come from mentfx block refinement, from structure refinement, from multiple structure refinement, and from Wyckoff down the line. So again, an S&D zone itself is 100% valid as long as it hasn't had a mitigation, at least in my eyes, right? There's probably others that teach S&D differently, but for me, S&D is and these zones are valid anywhere that have not had mitigations yet, and you add things to the pie to make it more probable. Okay. Doesn't need to grab liquidity to be valid. Not at all. Theoretically, yes, but the reason I say no, so again, you should watch the section 2 material because we talk about this a little bit. The thing is, what doesn't appear to be any grab on one time frame is actually a huge liquidity grab on another. So remember how we went inside of this wick right here and looked at how this wick came under this wick? It doesn't look like anything, right? But when you get lower, there's a whole new story about what happened at the area. So usually, whenever you see any down or up candle, supply or demand zone being formed, even if it's large, you can, if you zoom all the way in or even zoom out, you will see how it plays within price and liquidity manipulation. I don't have a set entry. I just have a feeling it'll hit that entry. I'll tell you, yeah, this is on GU. When an S&D zone gets mitigated, does it nullify the whole zone, or do you simply focus on the unmitigated portion of the zone? Both. I like the idea of multiple mitigations. Multiple mitigations can occur in an area, right? That's guaranteed because we never know their footprints, first of all, which also means that we never know how many orders are really in that area. So we don't know if they just need to mitigate the open and then continue in a given direction, or mitigate the open, come back, mitigate the middle, come back, mitigate the 98th percentile of it, and then drop, right? We don't know that. This is about, so that's going to be part of building your own strategy and back testing and forward testing, seeing which type of supply and demand zones best appeal to your own refinement and your own strategy. If you notice that the ones that have their first mitigation are the ones that you're always getting great entries on, then fuck the other ones. You don't need them. You found your edge and you can trade that edge now, right? Otherwise, continue to test and look for that. Which zones hold more validity, like certain time frame, imbalance before the zone? Imbalance before the zone, yes. Why? Because an imbalance before the zone means it hasn't been mitigated, right? So it's the same thing, right? An imbalance basically means that the zone has not been mitigated, so there's a higher chance that there's going to be mitigation there. Certain time frame, again, if you work with the weeklies, the monthlies, and the really high time frames, even the dailies, there's a higher likelihood of some supply and demand zones holding just because there are more orders in them. But the reality is, it's one and the same. If you go through the daily, you'll still see that there are supply and demand zones that don't hold when you would expect them to. As the untested zones are more powerful and work like magnets, when they're already mitigated zones, less likely. Perfect. Yeah, exactly. That's exactly the answer we were going for. What percentage do you take on your first partial? 50%? Yep, correct. I always struggle to distinguish accumulation with redistribution. Can you explain how to recognize them? Sure. I don't use reaccumulations or redistributions. And again, we will cover partly, actually a lot of this in the section 3 when we do deal with Wyckoff, but accumulation, right? Mark up. And you want accumulation with, well, actually it's accumulation with reaccumulation. Or I mean, yeah, that you're trying to ask for. Or redistribution. I mean, a redistribution looks like this. It's the same thing, just flipped, right? And then instead of that UTAD or that UT breaking down heavily, instead you'll usually see some kind of, maybe a break and then some kind of creek, right? And that creek functions as the first sign that you're most likely in a redistribution or reaccumulation. The liquidation of it, that's a spring, and now you have the accumulation. But what's interesting about this is if you look at this exact same thing repeats right inside here. So as long as you wait long enough, you'll see the same thing, and you don't have to look for the overall redistribution or reaccumulation. But again, you can, if you like it, you can go and spot it. If you do like to spot the creek and trade the creek, go for it. I myself, I've tried it. I've been successful with it. I just don't like it as much. I have a better way, right? I built my own system around what I've tested and what I like and don't like. It was on Minute 5. I don't know what we were talking about here, my bad. Is it okay to use supply and demand zones for POI and mentfx block for entry? Yeah, same thing. It's the exact same thing. If you have a supply or demand zone, so here's your POI, and you have price come in there, it's going to do the same thing. It's going to form moves along the way, and if those moves get traded through, that's going to be mentfx block or just a larger demand zone. And again, you can either wait for this demand zone to give you more setups inside it, right? Or you can wait for potential confirmation or get deeper in it, find this new mentfx block with a demand zone, wait for a new on the form, and then that could be a double confirmation to enter on this one. And again, even though it's a big mentfx block, now even that open to this low provides you a lot of breathing room for higher RR, right? So that's a fine way to look to get involved. It's 100% valid. How often do we need to look back to higher time frame before entering to make sure we are understanding the fractal nature of structure? All the time. I mean, I always look at all time frames. Like I constantly understand what's happening. At this point right here, even, I think I can remember. This is the 5-minute breaking down, right? What do I know about this 5-minute breakdown? I can already see it. I know that overall, this is maybe an hour or so in here. So that means in this hour, we created some kind of supply zone here and broke down, and we're coming to mitigate the supply zone. Now, how much of the supply zone do we want to mitigate? I want to see it come mitigate more up into these areas because that's the supply zones I'm looking at. Now, what is the supply zone mitigation part of? Well, it's part of, as I zoom out, I can see all the time frames by zooming out. I can see that it's part of this 4-hour or 1 hour, whatever it is, larger demand zone. So we're looking to tap into this. If we tap into this, what is that going to be part of? It's going to be part of this larger time frame mentfx block, which is all part of this bullish push. So we're coming to mitigate that to potentially come give us new highs, unless we want to break down. If we do break down, that's going to be part of a completely new shift, right? And we can keep zooming out, and literally, if you can't zoom out anymore, you can hear it. I can't zoom out anymore. You can switch to a higher time frame to see more. But at all times, I already know what the higher time frame wants to do, right? I have that bias in my mind. I'm just working with what's presenting me on the lower ones because I'm looking for confirmation to get involved at good areas and basically play the footprints back and forth. Go to hour 4 Euro USD, and there's a last bullish swing, and price broker that and turned bearish. Go to hour 4. Okay, hold on. Go to the hour 4. There's a last bullish swing, and price broker that and turned bearish. There's a last bullish swing, price broke that. So this would be, and I think price broke that just now. So I'm thinking you're asking about this. I don't want to unplay this chart because we're going to be looking at this entry in a sec, because I said we're going to work through how I caught my sell for my verification. So you're saying price broke down here, which it did, and that has shifted bearish, yes. I'm saying this because I'm taking 4 hours a higher time frame just for bias, not for market POS. For me, 4 hour is bearish or not. Yeah, so again, like I said, based on how you're looking at this overall price delivery, there are multiple things you can draw from it. Either this whole mentfx block just got created and we're in a large bullish retracement. At the same time, we have created overall bullish structure doing this. At the same time, we've created inner bullish structure here, and we've actually liquidated our bullish structure candlestick-wise here. So we've shifted bearish candlestick-wise. We haven't shifted bearish with structure, larger structure-wise, and we've potentially shifted bearish using this mentfx block, but we haven't shifted bearish using this mentfx block or even this mentfx block, right? So we're constantly in a state of multiple directional biases, and the proper way to address them is to understand which areas you can expect these mitigations to happen at and continuations to happen at. If you have shifted bearish on this, that's fine, right? As long as price comes up here and gives you the setup you need, that's a perfect bearish play to get to lower prices. But guess what? When you do that, you're going to be looking to target areas of sorts, right? Or even areas of sorts, the 50%, right, of that mentfx block. So again, that's why I'm circling this. And that's perfectly valid. I myself am not looking for that right now because that's not what I'm expecting. I'm still expecting bullishness. But similarly, if I don't get bullish behavior from these points, my bias can very quickly shift to your bias here, right? So you can, the point of looking at candlesticks is that we are constantly playing back and forth between the footprints. That's what the footprints are. We constantly need to buy to sell and sell to buy. We constantly create demand and supply zones back and forth within the price. As we do that, we create imbalances. What are imbalances? Not enough orders being filled. We come back to those areas to fill. So we always are creating this back and forth action. And that's why we can always be involved on either place, on either time frame, and constantly do what? Undergo Wyckoff. Because it literally is constantly undergoing manipulation, creation, new inefficiencies being met, and so on and so forth. Okay. Patience, let the schematic play out, or invert your chart and look for reaccumulation. Oh yeah, so you're talking to him. Yeah, exactly. I always get confused when price. So let's actually take a break at this point here. I think we're getting, oh my God, there's more questions. All right, before we continue, let's actually work through the actual sell that I took so we can actually talk about what happened here. So again, as you all remember, if any of you do remember, you can either go back in the video or just remember this. We have this bullish, the bullish pushes higher. We're expecting this area to be the next area where I want to look for potential bullishness. And to get there, we've just created new supply zones along the way. Those supply zones are holding. Either you've already taken a trade off the supply zones or you're still looking for a potential entry. We had this supply zone that we then refined down to this mini supply zone in it, the last up move before the down move that has not been mitigated yet. And now we're watching that area for potential mitigation. What do we have price do? Price taps into that area relatively simply and begins to break down. Now, as it breaks down, I believe our entry was off a 5 second. Let's go check it out real quick. Where is it? Here it is. I think it was this one, right? And then it ran like a shit ton. Yes, it was. Perfect. And we were on the 5 second. Yeah, exactly. Okay, so we have this demand zone up here, and we were on the 5 second operating it. Okay, let's go. Oh, so I actually have it drawn out for you guys here. Perfect. Very nice. Okay, so we get to this demand zone, and we jump into it, and we break away from it. Now, again, where's the mentfx block in this? You can use this low, and it only becomes valid here. So again, this is all valid for sell. You can already be in a sell on this at this open, right? And even though it looks relatively large, right? If we just draw this sell right here, right? It looks large, but when you really zoom out and really look at what your target is, which is just this open of the demand zone, then you see it's already a 1 to 10, right? So again, this is going to come down to you how you want to look for these entries, but because of the way I trade, I look for further confirmation so I can also take partials along the way. Now, we zoom in here, and you can already see that I drew out some mentfx blocks, but ultimately, what did we have? Price began to distribute and gave us Wyckoff in here, and you can see that again with the buying climax, the automatic rally, secondary test, or again, Wyckoff can exist on any impulse, and we'll cover this in the section, so do not worry if you do not understand this right now. We have this buying climax, this automatic rally, the secondary test, equal highs being created, liquidity, this upthrust creating a potential type 2 schematic, this breakdown, a test, then an actual sign of weakness. So we've already shifted and created this mentfx block. Now you can already trade this mentfx block for shorts if you want to, or you can wait. What do we have next? Price is coming to mitigate that, and now we're waiting for the break of this to confirm this mentfx block. Okay, what happens? Price breaks right down below it, and after that, I think it just, there it is. That's the retest. That was my entry right here. And from there on out, as you can see, price broke down all the way down to our area. And again, we can now play this a little bit faster. And price broke down all the way down there relatively quickly. And there we go. And price was met just at our final take profit. And again, all there was looking at a supply zone, waiting for price to get there, looking for Wyckoff or mentfx blocks, waiting for the structural shifts on lower timeframes, waiting for the mentfx block shifts on the lower timeframes, and entering the confirmation mentfx blocks to take price to new lows. And along the way, what did we do? Of course, as I said, I like to exit relatively early, or not exit, but partial relatively early. So what did I do? Under this low right here, I took my first partial and moved to break even. After doing that, price began to break down. I took my next partial, I believe, on like a 1 minute or 5 minute. This is up to you, right? I just kind of go between the timeframes and look for areas of good liquidity. Nothing really. This is the next area of liquidity I was targeting, especially with this demand zone right under it. So we don't know if price wants to stop here and continue all the way back up before falling. So I took another partial here, which was a good secure. And then at that point, my FTMO was almost complete. So I was looking for partials at this demand zone right here. And that was my final move of 1 to 30 RR. Okay, and that's it. And again, you could have held it to the next points too, and then you could have also began to lock in and hold it to even lower points. Now, I didn't trade this buy here myself, but when price did come into here, it still gave you a setup even though it continued lower. Okay, so even though, as you can see, it broke way down and did not hold in this demand zone, the first mitigation of this demand zone actually did give you a setup. And if you want to see that, again, I'm working with lower timeframes here, but this is the same. Looking at the 30-second here is the same as looking at a 15-minute off of a weekly or a daily order supplier demand zone. Okay, so hold on one sec. I asked that everybody just mutes. There we go. Perfect. So, oh yeah, this actual entry right here that I can show you guys. Let me see if I can lock this in. There it is. Right, so we can get down here. I was just looking at this after, just for you guys. But you can see that price came into these areas And what you'll notice is, don't even ignore this little box I have here, but let's think about this from a mentfx block standpoint. We have price coming lower, and this is the overall move down, but also within that, we create intermediary structure lower right here. This structure is controlled by this last down move, which is shown by this right here. Okay, price gets above that, as you can see right here. Price taps right back into it, comes higher, creates a mentfx block again, right? And at this point, you can be a buyer at this. So in this case, it actually did not hold there unless you had used the overall area, because at the same time that these two were valid as mentfx blocks, you also had this area get validated as its overall mentfx block. So this mitigation was actually the overall mitigation of this. So you have to consider that when you're still looking to enter with mentfx blocks. Now, if you wanted to use this higher one, notice what you could have done. Wait for the confirmation with a second one and wait for that to be validated right here. And notice what it does. It comes to test that demand zone, the overall one right here. This is all good to buy. Or you can go inside and look at the actual last demand zone, which is that last down candle, using the wick as the low, because that is still part of that overall move down that they had to sell into before the move up. And here's the mitigation of that. So it's all valid to place a buy here with a stop loss here. It's valid to place a buy here at 50% with a stop loss here. It's also valid to place a buy at the open with a stop loss here, right? These are all valid ways to approach this, okay? So that's again the entry that you could have caught on this original demand zone when it first jumped into it and then continued higher. Now again, if you maybe used a higher time frame, you might have actually gotten stopped. So let's actually take a look. So let's say we used a 1 minute time frame. You have this one right here, right, as your mentfx block, trades above and validates it right here, creates a new one, trades higher, and actually gives you a great entry to continue higher. So even on the 1 minute, you have a mentfx block entry that can get you in on this overall demand zone. And maybe the 5 minute is the one that would stop you out. So let's check it out. And lo and behold, even the 5 minute would not have stopped you out because there was no entry. Instead, price traded above either this mentfx block or this one, but never gave you a confirmation. So based on whether you took this as a risk or a confirmation, you can see that you could have still stayed out of this wrong, not this wrong, but this demand zone that did not want to hold for longer term buys, okay? I always get okay, so let's work through some more questions now, because we just covered our actual verification trade and you guys can see how I did that. So hopefully you guys understood that. And if there are any questions on that, then, you know, definitely ask them. And if I don't get around to any questions, because we usually aim for about an hour on our webinar. So at about 5 p.m. or when this hits about 5 p.m., we are going to wrap things up. And any questions that are not answered, definitely please post them in the webinar questions, because I do want to work through all that stuff too. So let's get through this question here. I always get confused when price is moving higher or lower from a POI because I don't know if price will hold demand zones 2.0 or take intermediate term liquidity. What do you say? The exact thing we looked at here. Look for confirmation, double demand zone or double mentfx block 2.0s and trade them. Or if you're not 100% ready to do that yet, watch them, see how they develop. Go back and watch an original demand zone that you were using or demand zone 2.0 and see how price developed from there. Because that's the only way that you're going to yourself either be confident in it or understand where your actual edge in this market is. Right? Because like I can give you guys I can show you guys examples nonstop as I've done, but until you guys see it with your own eyes and until you guys start to actually experience it, like having an area, seeing that area get played from, seeing the potential mitigation that it had, and then seeing how you could have managed it, even if it lost, will completely change the way you approach this market, as it has for a lot of people already, right? Do you ever see the spring tap into your refined POI, and would you use that as extra confluence? Yeah, of course. If I have a demand zone, here we go, let's draw it here. If I have a demand zone and price is coming lower and already forming potential Wyckoff, right, and then gives me a spring, that's fine. And then if you go inside here on a lower time frame, you might find another entry inside there. Or if you like working on this higher time frame, so let's say this was a daily and this just jumped into it on a 15-minute, right? Then you can wait for the validation. You can already enter on the risk, or you can wait for another validation and look to enter the new mentfx block, keeping in mind that there's a large mentfx block here, so you could take something with either a larger risk or confirm it with more demand zones, take the actual demand zone, take a lower demand zone, or take this mentfx block risk, right? There's multiple ways to enter again, and based on what you see works for you is what you should proceed with, right? And then you can see the markup. And again, you can aim for structural highs. If that's not enough RR for you, you can aim for higher, but at structural highs, you can choose to potentially break even, okay? So, yes, it is extra confluence, but it's still the same thing for me. Just because I see Wyckoff happening beforehand doesn't mean I'm going to take that area, right? And if I'm already set on taking an area and then I see Wyckoff happening before it, then that's fine. I'm not going to risk more or less though, because I have my what is it called? System that I want to follow, right? Does it need to grab liquidity to become valid? No, so we went over that. It technically does, but it always does anyway. So no, it does not. Say you are on the seconds, so 30-second chart, okay, fine. But again, it doesn't have to be any chart, just saying. I mean, it can be any time frame. And you have a POI, and it's like 1 to 2 pips away from hitting it, but it already started distributing UT, then BOS, and then test. But it's not the actual POI, but overall, it's likely inside an MB or major move. Would you still enter from the test, although it didn't hit the refined POI, which was 1 to 2 pips away? So in this specific case, I had a POI, and you're saying that if price had... So let's say this was my POI, and instead of price had done something like this and then moved away, would I consider this an entry? No. Because I had this area. If there was an area it hit, right, and it hit well, and it did this, and then moved away, then I'll consider it, because that's still part of my strategy if I'm okay with this POI. Otherwise, I will now set this as my new POI, or something of that sort, or new POIs that form, and use those the same way, right? Because my literal strategy, or even what I tell you guys, is form a bias beforehand, and let the market show you that it wants to do that. If it doesn't, no one's wrong. You weren't wrong because you waited and you understood what you were waiting for. Otherwise, if you're getting frisky and you're like, this supply or demand zone has to hold because, it's unmitigated, then you're going to lose over time, right? That's all that's going to happen. Thank you. So yeah, if you usually entered those, then, and they worked, then make that part of your strategy. Understand that, you have zones, but if those zones have distribution before them and don't get hit and then move away, then it's okay for you to be involved because you understand what your edge is and you saw it work. So you know how you want to approach it, right? That's perfectly valid. Remember, we always play back and forth with multiple ways of being able to trade. Despite the fact that all of you are part of this mentorship, a lot of you trade different ways to me. And a lot of you are successful doing it, right? But you still utilize the same concepts the same way, and you might even have a different bias to me. I remember one day you guys were selling in the EU, I think it was EU, and I was buying into it. I got -1. You guys made bank, and then I got into another buy while you guys were still selling. But your sells at this point were trailed to where you made profit, and then I made profit on my buys to your trails, right? It's a game of back and forth. You have to have a bias, and you have to trade your bias until that bias is validated. That's it. It seems simple, and it really is, but it gets hard when you start to see moves happen without you, and you really want to get in there, right? That'll always happen. Can you touch on figuring out your lot size quickly? Because sometimes it happens so fast because we'll be on second chart and I stumble calculating quickly. I mean, you'll have to just use an app or something. I use EU, so, if I look at this right now and go 1.1 pips, I'll just, I'll just do this. I'll go, okay, I want to put $400 risk on it. It's 1 pip, divide by 10, divide by 10, right? So I need to put 40 lots on it, and that's it. And then I'll sell it at 40 lots because I know what my risk is and how much I want. And with C-Trader, I'll just put in the 1.1 pips and it's done, and it'll go, and it won't hit using spread or anything because it's C-Trader, right? And that's it. So I mean, this is just up to you calculating it. I can't help you figure out lot size and stuff. Can we take a look at Bitcoin USD and see what I did wrong with the supply zone on the 5-minute? Let's maybe take a look at this after. I was looking at Bitcoin USD earlier. Maybe if you can send a trading view photo, Kevin, below as I make through this. Bullish push. Kevin, are you trading that right now? Oh, bullish push. Do you look at candlestick pattern or enter a trade? I mean, I don't know what you want to call a candlestick pattern. My candlestick pattern is waiting for Wyckoff and then entering. That's my candlestick pattern. So no, I don't use like pin bars or anything of that sort. The only candlestick I care about is the demand or supply zone, or the overall demand and supply zone, right? Oh shit, I skipped it. Where were we? Hold on, let's find out. Oh, there we go. Perfect. Do you look... Oh, that's the one we just did. Do you look at momentum as extra confluence of directional bias? No, I don't care about momentum. Not at all. You can use it though. I've seen a lot of people that use it and they do really well with it, but I really don't care about that stuff. It just confuses me because I already have enough things in my arsenal that I use that I need. Adding to it right now, I don't need to. Right? There's no purpose. There are multiple great tools out there. Even like I bet you some of you could even use the VPVR, whatever it's called, the volume profile thing, to go target liquidity and stuff like that, and you could be successful doing that. But I don't need to because I know how I like to get involved and I know what I'm looking for. It would have been valid to enter on the supply zone right away. On this one, yes, it would. Again, every supply zone is valid to have potential mitigation from. Theoretically, this supply zone did see this break, saw these breaks, and then saw these overall breaks, and it was also the refined 1 hour supply zone. So, of course, you can use that for sells. Team made 10% on this trade. It was the verification, so it was 5%. Yes, and it wasn't for the 1 to 30. I literally, like, I just locked in the, so where is this? I locked in the overall take profit to the verification completion. I didn't just, let it run. So I took my partial, and then I ran it to wherever the thing was going to complete, which I think was at like 1 to 20. I'm not sure. I'm not 100% sure. And yeah, that was my 5%. So again, like I might catch higher R's, but it doesn't mean that I'm locking in huge percentages like that. But that's the way I like to trade because I know that it's consistent for me and it works with my emotions, right? Close one, yeah. I remember that. Oof. Yeah. That's half a ton. I think that's 1.5 now, right? Is the 30-second time frame 30 ticks on CTrader? Yeah, very similar. I think the 15 ticks is more like the 30-second, but again, like you can use them both. It's fine, you can use them. Yeah, but like it looks like more the 15 ticks is more the 30-sec. You can, I guess if you don't have the 30-second, it's hard to check, but 15 ticks is a one. Is this buy viewable on a 1-minute chart? This one here? No, it is not. Not at all. This buy is hidden to the 1-minute eyes. Is FXDM the closest to FTMO? I honestly don't know, but for the most part, there isn't any difference between most brokers. The only thing I've seen different was like IC markets, with a lot of you that have shown me, getting stopped out for no reason. That's the only thing I've seen with different delivery. But usually delivery of price on any broker is the same. Like I don't check the similarities between the two because like they're pretty much the same, I think. Could you explain how to properly enter a position for stop loss with the spread? If my initial stop loss is 3, do I just add spread to these 3 pips? Yeah, exactly. So if the spread is, if you're selling and you want to enter with a 1.1 pip stop loss, but the spread is, 0.5 pips, then for your actual risk, you're actually not risking 1.1. Overall, your risk is actually around 1.6. So I'd just risk 2 pips because that's how I would do it. If I saw this, I'd be like, okay, I'm going to risk about 1.5 because, FTMO with CTrader is 0.0 spread. So I'd just do 1.5, right? And, put your risk, maybe 400, since it's a 50K account. So your risk is 26 lots, right? Or 27 lots. And then you take that, and that's it, right? If your POI is on a higher time frame, like the 8-hour, for example, would entering on such a low time frame like the minute one be risky? No, but also this is the time where you're going to see what we spoke about in structure 1, 2, 3, and 4, all the structure videos, which is that if we have an 8-hour POI or 8-hour demand zone and price comes into it, it's going to give you a 1-minute setup here potentially, right? Give you more 1-minute setups here, 1-minute setups in here, maybe 1-minute setups here, and then really run, right? So there's multiple opportunities you're going to see to enter. And if you watch my GJ video on YouTube, this is exactly what happens. If any of you remember that insane week where we had one supply zone and literally we sold here, sold inside of that sell here, sold here, waited for the big breakdown, saw that it was large Wyckoff, and then sold here and one more time here before it finally turned around. We were able to make profit on each of these except for like one of them, right? That's the idea of understanding that when you're on a lower time frame, price can switch back and forth. If you stayed on, for instance, a 15-minute or 5-minute on this specific setup, you would have only seen this, right? And that would have been a valid entry before whatever happened. But that's what you could have. So again, like same thing. But yes, it's not more risky. It's just that price is more dynamic, and you have to expect that. So again, if you don't like that, or it's too much for you, or your brain explodes when you do it, don't do it right now. Work on the higher, because the thing is, like I always say, price moves the same way on all time frames. Always, it's delivered the same way. It's just that when it's delivered to you more slowly on a 4-hour chart, and and it takes longer for you to win or lose, you feel like you've done something right even when you lose. Even when you lose that 4-hour chart, you're like, it's okay, because it took like a day or it took multiple hours for you to actually be stopped out. However, if you take that exact same setup on a 1-minute chart or even a 30-second chart and you get stopped out in the first 15 seconds, you're sitting there going, oh my God, I've done something wrong. I've lost money so quickly. But the reality is it's just the same thing that happened quicker, right? So what I mean by that is if you take your 3 months of 4-hour entries, and you took the win rate of that, it would pretty much be the same as the 30 trades you took on the 1-minute time frame during that week, right? But shown over a longer period of time, it feels different. That's all. It's emotion. At least in my mind, that's how I think about it. Do you like to set buy and sell orders, or do you market execute? I usually market execute just because I'm working on 15, 30 seconds, and price jumps in, it mitigates usually for just a little bit, and I'll sell into it. That's all. You passed the challenge in only this one trade. I passed the challenge in one trade before this trade. This is the verification. I passed this one in one trade too. This was in day one. I actually had a negative beginning too. So I'll actually show you guys. Hold on. Let's see if I can find this. I was like down 1K on the overall verification account, but I still passed in one day of the verification. So let's go from last 2 weeks. It should be able to show it. Yeah, there we go. So you can see we had a rough start to the beginning, but that's fine. Again, we're operating on low time frames, so you're going to take losses. And again, this was a bigger risk. It was part of like the same trade, but I think spread was too wide, so it took me out at more risk. And you can see this was all on the 25th, until we got to the 26th, right? And you can see most of it was made right here on one trade. This is all that sell that you see right here. This is the main sell, and that was all done on the 26th. So again, it was 2 days. Literally 2 days to pass the verification, and the first day started like shit. But again, this is just proof of how you can, if you understand what you're doing and you understand that you can still take losses, then it's no problem. Do you take multiple entries? If so, what are your conditions? We'll talk about conditions again maybe next week or something, but again, it was everything that I just showed you here. The conditions is that I want to see a supply or demand zone, I want to see it be hit, I want to see confirmation within it, and then I either want to see more confirmation or I want to enter. Right, that's it. Well, wait a minute, how can it be 4:55 on your clock, but it's easy, but it's already 5 p.m. for me? My clock is slow. You're living in the future, bro. What did you risk per trade on FTMO? Do you recommend 0.5? This is up to you. I do not recommend financial advice. You risk what you want to risk. You risk as per your own strategy. Your emotions are yours to learn, control, and risk on trades. No wonder he's literally predicting these markets. 40 lots, oh boy. I mean, yeah, the 40 lots is $400 a pip, but if you're risking, 0.5 pips, that's $200 risk right there. Use myfxpo.com or baby pips position calculator, and it will calculate the lot amount for you automatically. Exactly, yeah. Do you use volume or very rarely? I do not. I don't like volume for Forex. I barely even use it for stocks. I just don't care about volume. But again, some of you might like it a lot. If you've checked out my volume videos and seen volume and you like it, get to it. It's amazing. Why Lion got lost in jungle? Because jungle is massive. Nice. Amazing. Anton, great webinar as usual. Have a good weekend, everyone. I hope everybody enjoyed it. Anyone that has to leave, but we're going to work through the rest of these things real quick because this is going to be the first webinar posted to everyone. So, it'll set a standard for the future ones, of course. I am with IC Markets and I have been stopped out on several times for no reason. Yeah, I have no idea why this happens. Check out #broker in our Discord and use that one instead. I sent you a picture in DMs of Bitcoin USD. All right, let's take a look. Wait. Kevin from the webinar. Why did this 5-minute supply zone not hold is the question. All right, let's take a quick look for you and just explain what's going on here. 5-minute. Okay. You had this zone right here. I mean, first of all, we know why it didn't hold. It just doesn't hold because, zones don't have to hold. Wait, this zone? Is this the right one? What am I looking at here? Hold on. Traded through this last push down. Oh, this one. Okay. Okay, I see. Okay, well, first of all, just on the 5-minute, this supply zone has already been mitigated, okay? So move up, move down, mitigation. That was a mitigation, continuation. Then we had this zone here if you wanted to use it, and as you can see, there was no setup. If we get lower, even to the 15 second and go inside there, you can see that there was absolutely no confirmation of any sort that gave you any bearishness, fuck it, I can't say that word, down pressure to get involved in these cells. So that is why that area did not hold. That's all. That's why when lower time frame meets higher, they are bomb. Exactly. What do you do to help with emotions or over trading? Do you have a set routine? Yeah, never take more than 2 entries on a given POI if they both lose. Like, I can take multiple entries. I can even take 10. But the second 2 of them lose, I'm done with that POI for myself, at least. And emotions, I honestly am complete shit with my emotions. So I, like I said, created a system where I will get involved very, very low. That way, either I get stopped out in 5 seconds, 15 seconds, or I get to partial in, a minute or two, and then I can let it run because I already have money secured. So I don't care. That's the only way. That's how I deal with my own emotions, right? But you can try meditating or something like that. Please make other videos soon. Can't wait. On it, man. Like off below. How much percents do you usually make monthly? Haha, you don't have to answer if you don't want to. I will not answer this one. But concerning RR, it's not crazy to aim for anywhere between, honestly, 3 RR on average in a week is good in my eyes. And then aiming for about 5 to 10 RR. Well, since we're talking RR and not actual percentages, maybe 10 to 20 RR in a month is something you can aim for. And if you're trading higher time frames, aiming for 10 RR a month is fine. Because remember, it doesn't matter what RR you're making. If your RR is positive and consistent, then over time you are guaranteed to make money, right? So always remember that. But concerning RR myself, I like to aim, or at least, like, I don't like the aim part of things because, you force things. There's no need to do that because if you know what you're doing and how to be profitable, then just keep doing that. But aiming for 10 to 20 RR in a month I think that's pretty good, right? And that can literally be 10 1 minute or 30-second entries with partials at 1 to 2 RR, literally. And that confirms that, right? ETA on estimated time on more section material. I'm Mitch over here. Bro, we're working on it, don't worry. I'll probably have supply and demand or the most part of it done by this week. I'm just in the middle of my classes and stuff, so I have to make sure I manage those 2 things. But in about 3 weeks, when everything is done, we'll have time to unleash basically everything on you guys because we'll be able to focus solely on the actual business. What do you expect on GU? So we'll take a look at GU at the end of this really quickly for you guys, just after I get through these questions. Can you tell us the issue with ICT and what he said to you? Honestly, not that much hate towards ICT. I understand where he's coming from. He probably did. He did bring some of the smart money to the forefront, so we'll do that. If you check my description videos, I've dropped a little thing where I basically put down that I was partly inspired by some of his stuff. That way, my videos can stay up on YouTube. And basically everything's going to be fine, but we are going to work with what we actually do, which is supply and demand. So that's all. What do you think of my Bitcoin setup? I posted in Trade Talk just before. Let's take a quick look at that as well. Why not? Let's go find this. Go into Trade Talk. Click here we go. You have a supply zone here. Yeah, we just looked at that supply zone. It might be fine. You already have an entry. I don't know why 100% yet, so we'll take a look. You're looking. So again, we only broke down this. So again, for myself, on this specific time frame right here, we've only broken down 1 structural point. So this could have just been a normal liquidity grab instead of it being ready to continue lower. However, if it had another breakdown, I would potentially look for sells. Myself, I don't see any Wyckoff here yet too. So, that's not in my criteria, but it is a supply zone and it's valid, I'm pretty sure. If we go to the 5 minute, 3 minute you were on, I believe. You're looking at this supply zone here. This supply zone on its own is mitigated. However, this overall one right here has not been mitigated. So I guess it's okay to look inside this whole area. You can draw this over. We can look inside here. Probably get a little lower because I don't see anything Again, we had that breakdown. That's fine, but we didn't get a second breakdown. But at the same time, we're starting to form whatever's in here, and structure is beginning to shift. And now we're having the same thing happen. So if price gets below here, I'd be okay with looking for potential sells off of the demand zones left, supply zones left up here to get down lower for partials at potentially this low, and then to see continuations lower. But again, I don't have the higher time frame in mind. This is just with this area itself. But this is too ugly for me. I don't like this for any reason. Like, this is just shit. So nah. Last week you traded mostly Asian. Will this week be the same? I do not know. Sometimes I wake up early and trade New York and London. New York. Sometimes I stay up. The New York and London overlap, and then New York. Sometimes I stay up really late and just trade London. Sometimes I'll just be in Asia. It doesn't. I have no idea, honestly. I'm waiting for my live account. So I guess at this point I'm just waiting the 10 days anyway. But if I do look at something, I'll definitely send it out. Meant, when you gonna do the separate currency channels thing? Soon. Today or tomorrow, we'll see. I still wanna have everything organized, but we're working through that all. But hopefully you guys are liking the structure we're putting out right now, with all the videos and stuff, the way they are being presented. And I know we had to remove a lot to do that, but also it's going to keep things a lot more clean. And now the webinars are going to come, and the questions in them are going to come from what we have out. So there's not going to be any confusion for new members, or even members that have just started seeing the structural videos and stuff like that. Can you check my Bitcoin buy in member trade ideas? Okay, we'll go look at that too real quick. Member trade ideas. T1, there we go. I mean, beautiful buy. I mean, what else do you want me to say? Yeah, it's beautiful. It looks great. Yeah, that's fantastic. You had structure breakdown, you had the big move up, overall big mentfx block here, and in here you had prices come down. Did it ever get above this? It kind of did. So you could have used also this overall move, but there was no setup in here. I mean, yeah, use the 50% of this last wick. Yeah, that's perfect. It's a great buy. Yeah, like, it's beautiful. Market entered, got a very shit price, sadly. Oh, I'm sorry to hear that. He's from the future, you can tell he can trade all sessions at the same time. Yeah, I just operate in all of them. Videos are fire, very organized. Thank you so much, guys. I appreciate all the support. Yeah, it is really good to have a step-by-step approach. Perfect. I'm really happy you guys are enjoying it. Do you usually do a market outlook on a Sunday, Anton? Right now, no. But again, like I said, we are going to start doing all of that down the line as well. Don't worry. We're going to start doing market outlooks. And also, like I said, once I'm done with my stuff, we're going to start to do market outlooks and potentially hold calls intra-week as well, right? Not like every day or anything like that, but we could start to hold 2 a week and something like that. And of course, we'll see how that goes, and we'll increase or decrease based on what we need to, based on how it goes. It's really good to have a step-by-step. Very nice. Well thought out. Thank you. Videos are hard. Love it. Somebody wake up. Lost value. Appreciate it. Breeding new traders, yeah, true. Loving the new setup with the mentorship. Appreciate it again. Just joined yesterday. Oh wow, okay, nice. Okay, bro, cool. Came here from Vertex. Glad I came. Glad to have you here. Vertex, they're actually some good friends of mine. I talk with them sometimes, so they got some good stuff there. But ultimately, we cover a lot, similarly, and even more here. So as long as you stick to the content here and dedicate yourself, and then bring your own strategy out of it or start spotting your own things, you guys are set for your own success. All right, well, thank you so much, guys. I hope you enjoyed the webinar today. This is going to be the first webinar that we are going to have uploaded to the new revamped Discord, and I will see you guys over this week. Thank you so much, guys.
Thank you. Take care.